Alrighty guys, so in today's video, I'm going to take you through 3 trade examples from this morning of how I execute during the Asian session. Keeping it nice and simple today, we're going to use inversion fair value gaps, sweeps, liquidity, and macro timeframes. Let's get straight into it. What I want you to notice, and I want you to take notes if you're doing this, I want you to first mark out the Asian session. The Asian session is for me from 7 o'clock, which I'll mark out with this line, all the way until 12 o'clock. So realistically, the Asian session is a 5-hour session, and I like to focus on a specific portion of that session. That's really, really important. Now, what do I mean by a new week opening gap or a new day opening gap? For me, I'm talking about the actual space. I don't really want to include the candle here, but the actual space created from the previous week close to this week's open. And you can see there's a massive void. It's like a liquidity void. Sometimes you'll actually have a volume imbalance. That is what I like to see. Why do I like to see that? Because that is an unfilled space in price. And I believe that price is probably going to trade back towards that, or there's a high chance. You can see in this session is that the market moves up. What's the market move up to do? The market moves up to sweep this buy side liquidity. Now, what's important about this buy side liquidity is that these are 2 relative equal highs. At this point in time too, there's SMT between the NASDAQ and the ES chart. We have to sweep that high? No. Is it ideal? Yes. But what is going to give you confidence that potentially there could be a turnaround point here? There's 2 macros. The first one is 650 to 710. And the second is 750 to 810. And just have a look at what we do in those macros. You tell me if this is where we pivot and this is where price decides to move down just a little bit. Right, so have a look there. First macro and then second macro. Right after that, we push up, we sweep the buy side. Immediately, my eyes are engaged around that macro time frame. They're engaged to look for a reversal. Why am I looking for a reversal? Because we've left a massive new week opening gap. This could be a new day opening gap too, doesn't matter, but treat this as a void in liquidity, a void where price probably wants to fill. Do we come and fill it here? No. So the chance is that somewhere along the lines we're going to come and fill that. Once we fill that, yes, there's a chance we could react from it, but not always, and let's talk about it. Now the question is, well, Ruben, how do I enter? Where do I enter from? Where can my stop loss be? Where can my entry be? Have a look at this, guys, right? We've got that first macro. Just after that macro, we can see we've got this inversion fair value gap right here. That in itself could provide you with an entry. If you don't like that, you can wait, right, until we invert that again, and that provides you with an entry to go short. Now remember, your overall narrative is looking for shorts. Why? Because we've left this massive gap. We've gapped up and now we've swept buy side liquidity. After sweeping liquidity, what should we do? Potentially reprice. Where should we reprice to? Into an imbalance, into some void in price, which is this purple zone here. Where can you put your stop loss? Where can you put your entry? So for me personally, I took a short roughly from here. My stop loss went above this green candle. These green candles here, guys, these reflect an order block. Right, so these up close candles. When we close below, that creates an order block. And when we close below this inversion again, I had further confidence that price was probably going to head lower. Now, do you have to take price all the way down to this swing low and this new week opening gap? No. For me personally, when I trade the Asian session, I like to take roughly about 10 handles from the market. And if we go back to 10 handles, you can see that's around here. That is where the bulk of my contracts come off or contract. The rest, in my situation here, was stopped at break even. Price still goes there anyway, but it's not a big deal because there's going to be multiple opportunities that you can take advantage of in the market. But price sweeps that point of 10 handles, which is what you're looking to take. Then you get stopped at break even. That's completely fine. The next trade idea does not come. You got to wait, right? You got to wait until potentially we invert something else, which you do here. Could that give you a small scalp, an inversion there to this swing low? Yes, right? You could, for example, do something like this if it suits your entry model. You could do something like this. Stop above that order block, targeting that swing low. Go for a quick 1-to-1, a quick 7 handles. The biggest thing, right? The biggest thing, guys, when you're trading the Asian session that I found, massive problem I used to have was holding trades for too long, not paying myself, watching price go all the way up, moving my stop loss to break even. And then what do you know? I'm stopped to break even and I could have paid myself. When you're trading the Asian session, you have to take partials, you have to pay yourself as a trader and flow with the market, right? If you want to hold a runner, hold a runner. But what I've found most success in with the Asian session is targeting low hanging fruit, 10, 15, 20 handles, and you'll know based on the day how price is going to move, because if price wants to move, it's going to move, right? When is price going to move? It's going to move during macros or around those macro timeframes. If the macros don't move, there's a good chance it's probably going to range, and there's a good chance you probably want to take your base hits, be in, be out, call it a day. So already right here, there's two opportunities. These are two things that I called out to my Discord. I don't stream Asian session, but I will post my analysis pretty much every day when I'm free if I see something that I like. And obviously we end up sweeping this sell side, which was the original draw on liquidity. Doesn't matter what kind of ego boosting you want in terms of, I caught a 50, 60, 80 handle trade in Asian session. Who cares? Focus on what pays you, focus on consistency, focus on seeing things like this repeat. Consistent bread and butter trades that you know are probably going to happen every single day during the Asian session. At some point, when you have a big gap, you're probably going to trade towards it. You're probably going to react from it. You're probably going to do this. You could even take a short here, quick scalp during the next macro if you have a look. So if we mark this out, we sweep buy side right here. We have an inversion fair value gap. Entry comes from here with a stop loss placed above the body of this candle, and then you're good to go. So realistically, when you're trading the markets, you want to try and find the best opportunities, the highest probability trade ideas. Not always will the market range like this, but these are the conditions that I like. It allows for base hits, it allows for multiple opportunities, and then ultimately we end up coming down into this new week opening gap section. And here's the thing, look at how we react after sweeping that sell side. Isn't that quite interesting, guys? Automatically we react back up to where? Where do we react back up into? We sweep this sell side, we create this inversion fair value gap, and this is a really good day to study, right? All inversions, all nice and simplistic. Sweep the sell side, inversion fair value gap, then we have a shift in structure right here. That should provide you confidence that we're probably going to move a bit higher. Where are we going to move higher to though? This swing high, this swing high, this swing high, and potentially this swing high. But do we have to take that out? No. Why? Because that swing high is what enacted that original move to the downside. And keep in mind that we still have this swing low and this new week opening gap, which price ends up taking out in the long run. So again, we could go short here and we could go short here. We could also go long here, targeting this high, and this high. Go for those base hits in the Asian session. Take that 10 handle, take that 1 to 2, take that 1 to 1. Anything that range, in my opinion, is completely sufficient. These are 3 trade ideas that I've posted to my Discord in live time. I don't typically trade the Asian session, but when I'm available, I like to post my ideas, my narrative. And you can see, right, I want to do the longs from this or from this point. 2 points, 2 reactionary zones. All I'm looking for from these areas is a clear inversion fair value gap. I've already got a clear draw on liquidity. The rest is just flowing through. So that's basically how I trade the Asian session. Today is a great example of how I do that. I'm using previous sweeps liquidity. I'm trading it like I would the London session. I'm taking those small base hits, those 1-to-1s, those 1-to-1.5s, those 10 handle partials, then going to break even. I'm paying myself as a trader. I can trade towards the new week opening gap. I can trade away from it. I can do both, right? I can do both. The highest probability trades, in my opinion, come trading towards this big gap. Once that gap gets engaged, it's up to you how you trade, because as you can see here, we've swept liquidity, we've created inversions here, and this idea fails. But why does it fail? Look at how price reacts here. And this is the whole thing when you're trading the Asian session, or really any session. You've got to monitor price and not expect or demand that price is going to go 100% in your favor. We entered along from maybe an inversion fair value gap here. Always in my Discord, I preach. This fair value gap, you want to see that ran through. If it starts to be respected, mitigate your risk or take a partial. What's mitigate your risk mean? Go to break even, reduce your stop. So essentially, if your stop's below here, bring it up below this order block. You don't want to risk much on this trade anymore. If price was so bullish, we should have respected this new week opening gap and displaced through this sell side imbalance. Taking those small trades doesn't mean you have to, completely forget about basic market structure and basic principles of what should be respected and what should be disrespected. That still needs to be in the forefront of your mind when you're taking a trade. In the Asian session, the London session, New York session, whatever session you're trading, that has to be there. That has to be a priority when you're looking at the trade idea and seeing the trade play out. I hope you guys got something from this video. The key takeaways, guys, are to look for that new week opening gap, look for that new day opening gap, treat this as a fair value gap and trade towards it. Look for trades around macros, look for trades after liquidity has been swept, and keep it simple. Enter from an inversion, put your stop above the body, above the high, target 10 handles, call it a day, hold a runner.